Good evening, everybody. Welcome. Hello. It is indeed 1900 hours on the 11th of May. Hello, Tom. Welcome. And here we are for the clinic session. I've prepared some notes. We'll go through those and then cover any questions you might have. Hello, hello. Hi, Mary. Hi, Tom. Hello, whoever is in the TraDeca account. Hello, Henry. Welcome. Now, very often in my sessions, I come up with, oh, hi Janelle, good to see you on. Very often in my sessions, I come up with some or other great idea for this Monday clinic session. Then we continue with our trading and following our plan, or at least my plan. Quite positively, I might add. So often I forget the great idea that was had. Reminders then are always welcome, as are suggestions for content and lesson topics. On Thursday, during the session, I had one of those wonderful ideas. It immediately fled to some dark and quiet corner of my mind, avoiding my search and defying my need to note it down. Not to worry, either I found it or I may have remembered. Is this something completely different and maybe even quite random tonight if I didn't? Who can tell? Hi Judy. Well, I was talking about Fibonacci drawing, pivots and levels on Thursday, and it crossed my mind, albeit briefly, that we have taken quite a few very interesting and very profitable entries from them recently. That's pretty much exactly what I want to talk about today. Not pivots though, really. Signals. Signals will always outrank pivots. Signals will always outrank a fib drawing or divergence or some lunatic sending you emails telling you about their latest signal service giving a buy or a sell signal. Usually very much after the event, I must add. Signals can be confirmed by those pivots that we talked about, by divergence, and generally by anything resembling proven support and resistance. That helps us a lot. Confluence, then, is the word of the day. Contrary to what social media posts suggest, rude words generally there, but we're talking about confluence because we're trading high probability whilst looking for low risk. Do we find it? Well, yes, and very often too. On the days we don't find it, like Thursday morning last week on DAX, for example, we got nothing. We sat back, and that's what we're going to do. We're going to sit back and take nothing, rather than give anything away. I listed that session as a 0. I took nothing myself, and we saw chop, range, and a couple of BFOs to boot. Then they had us heading for the coffee station, for the hills. Made up for it in the US Open session though, did we not? Some nice trades. We draw at 14.26. Some nice lines we draw at 14.26. A 4-minute warning, if you like. No, I jumped a line there, you know what. Some nice trades signalled by our strategy of indicators and confirmed or confluenced, if you like, by our breakout rules. Those lines that we draw at 14.26. A 4-minute warning in time for the open and in plenty of time to place our orders. So, signals first, pivots of anything sensible second, fibs next, and never, but never a gut feeling. Had we traded gut feelings on Tuesday, you all would have sold off those all-time NAS highs at 28,000. And you would not have waited for my very anticipated and very welcome 28,657. And I just messaged a lady named Tammy. If you watch this recording, Tammy, I want to thank you for your comments that you post on my YouTube channel. And you did question the 28,657. Where did it come from? It's a Fibonacci number. It is a number in the Fibonacci sequence. It's exactly the same as we came up with the 46.3, whatever it was, for the Dow many moons ago. Questions please on that or those, remembering that we can go offline after the recording ends to question the main strategy. Hi Claude, good to see you on. Oof, says Janelle, had a student adamantly tell me they would be trading off their gut feelings just last week. Will recommend they watch this replay. Well, I appreciate you telling them to watch this replay. Janelle, I think gut feelings are, you know, when you eat something dodgy, yeah, then you can get a gut feeling, and the gut feeling will probably be along the lines of, ooh, probably shouldn't have eaten that. They have a saying in Ireland that, oh, I had a terrible curry last night after my night out. And the saying goes, yeah, there was nothing wrong with the 18 pints of Guinness you had prior to the curry, though, was there? It was the curry. It was absolutely a dodgy curry. Those, they're gut feelings, absolutely. But you see that there? Well, that's a signal right there. And if we put a little drawing on it, we can see that, yes, there was divergence. We can see... Where can we see? I'd have to scroll off screen to see it. It's convergence there. I need to get rid of that thing for a moment. Let's go with that thing for a moment and move it over. And it's convergence there. It's higher lows and it's lower lows there. You see higher lows on price. Sorry, higher lows on histogram. Higher lows on price. I do see some at tiny here. See this lower lows, higher lows. So we do have some signs of divergence there, albeit small. Then we have the rejection of a line. There, right there, is a BRN. You can all see this number over here, 29,300. That's a big round number. And we've rejected it. So divergence, rejection of a line. And if you were only looking at closed bars, right there is your signal. It's a hopper combo. And if we look at the time, it's what, 1824, we've got an RTF. 1824, we've gone green, and we go up through the big round number. So there you go. Does the 2 minute suggest you can buy it? Yes, it does. If we look at it a little more closely from that, we could say X, we could say A, we could say B, and B is higher than A, so that means D should be a little higher than X. In this case, it's pretty much the same. Why? Well, because there's another big round number up there. And if I get rid of that thing or bring him back, we can actually put one of them there, fancy W's or butterfly pattern, however you like to call it. Of course, we're going to put it on here, aren't we? Because we're on the wrong chart. So clickety click, click, click. I've drawn on it, but that don't matter to this chart. I want a butterfly. And we go X, A, B, C, D. There you go, a butterfly pattern. They're at least level, I'm going to say. They're pretty much level there. He might be a little bit lower. Don't matter. It's there. It's a butterfly. You're trading the XA. Ooh, Egypt with my drawing, aren't I? Let me just go and clear this type of drawing, because what I need to do is... That's X, A, B, C, C to D leg. If only I was clever. Let's put him back. And that leg there, the C to D leg of a W, is my favourite leg of the journey. So there is your entry. You've got a really tight stop loss or a worst case scenario stop loss at the big round number. You're entering, I'm going to say it's about 320. So you've got a 10 to 20 pip stop loss, which means you're looking for 20 to 40 pips. If you're in at 320, we can safely say that there's a couple of fib drawings with this classic colour retracement here, and another green, red fib drawing here. That's at least the 50%, if not the 61.8. There's a 38.2 continuation there. So on balance of probability, there are 320 to 380. There are 60 pips in at least one, maybe two or three moves. That's the reality of what's available when we look at signals. because signals is the order of the day. Confluence on them by all means, but signals first. Signals are your primary goal. Let's look at this buy. Is it a buy? It's a hopper combo, James. It is. Is this in buy mode? It isn't. So was that ever really a buy? Not really. This then was a continuation sell. We're in buy mode. We've got the W, we've got the divergence, the rejection of a line, and we see the pattern forming. So this signal represents C to D. Tell me about this sell signal. Is it valid? It's doable, but it's counter trend, isn't it? You'd be selling it based on the fact that pink pretty much crossed purple. They did interlock there. Now, I've said on many occasions, there's my impression from Police Academy, many occasions, pink crosses purple, we get a pullback. And that there then is the pullback based on pink crossing purple. And I'm going to suggest that that there is the cross. So this would be counter trend. It's doable, but it's not something that you can say, oh yeah, I'll just sell that and relax. I don't suppose you ever can relax once you're in the trade. But this buy, well, it's a pivot buy and it meets all the criteria. The divergence is there with, if we looked at it, we've got higher lows on the histogram, we've got lower lows on the line, divergence within the indicator. Rejection of a line, big pink one right there. And my famous 60 or 40, but in this case it's 60, 360s. You all know I like 60s and 40s. It's related to the Fibonacci thing. So you could have been in from the break of the line with a stop of the bar that straddled the line last, if it was this one or this one, but wherever you're entering. And then if we put a cross hair on that for a moment, or we put one of them on it, you're active now, aren't you? So if we put a measure on there, we could safely say there's a 370. I think we all know we'd have to be looking for the big round number as a target, 400. Did we get it? No, we didn't. But they're all green bars, and he breached the low of a green bar. He breached the low of that bar. So as a worst case scenario, there's 5 pips in it. As a best case scenario, any divergence? Not really. So as a worst case scenario, yeah, 5 to 10 pips is all you would ever have gotten out of that one. Okay, we know it's toppy because we've hit a level once, twice, thrice, 4 times before finally deciding, nah, I just don't got the legs to get through that line. That doesn't mean I won't get there at some stage, but just for now, you need a fib. Green, green, green. There's at least 3 greens to the red, and we need a pullback and a reason to break above the big round number. The bands are still expanding. You all know we've got a better strategy that might well have put us into this already. Who can tell? We'd need a MACD scalper pattern, as in a higher high here. We're getting green over here, but there are signs of divergence or convergence with lower highs and wiki bars. So it could be that this has clearly ran out of steam for the moment. It might have. We don't know for sure, but we'd have to draw the fib to measure and offer us some level of certainty. For now, it doesn't matter. We can't sell it. If we're not in the buy, we can't enter the buy late, so there's nothing we can do with it. That's all. That's how signals help us. They let us in and they keep us safe. They give us a valid stop. They give us a valid 2-to-1 target. They tell us when we're trading with trend, and they tell us when we're trading against trend. And then we know we'd need more reasons to be finger on button. They tell us when we're trading against trend, even with a continuation. Oh, sorry, no, that's with. They tell us when we're trading a continuation, or if we're daft enough to be trading against the trend. That's the bit I was looking for right there. And it's not daft to trade against the trend. It just carries a higher risk and a lower probability. That is all I have. We are about 15 minutes in, so I will end the recording there and say thank you all for watching. Another thank you to Tammy for actually, she's not a member of our group, but she actually clicks like on our YouTube recordings, and she makes a comment as well. And sometimes there's a question in there, which is really nice because it makes you think. And I do like that, you know. So thank you again, Tammy. And thanks everybody for joining me. It's exactly 15 minutes now, so I'll say I'll see you all on the next live session, and here endeth the recording. Thank you.